Thank you for tuning in to another edition of the Vulcan Report. Someone had asked me what do I think of the Dow Jones head and shoulders pattern, and to be quite honest with you, I don't really see such a pattern developing. Right now you're looking at the Dow Jones futures contract, the mini Dow Jones, ticker symbol YM, and you're looking at a monthly chart. And according to the monthly chart, I do not see the argument for a head and shoulders pattern. On the contrary, I see something quite different. As a matter of fact, if you go back to the end of 1999, you see here that we were quite consolidated for a while. We really didn't break out until 2006, 2007. Then we peaked out at 2007. And then in 2008, we broke major support and continued to decline lower. Then we climaxed with a low in March of 2009. From there, we retraced to about a 50% retracement back up here, and we have now peaked in 2010. On April 30th, we hit 11,258.01. And we failed to take that out in May the 28th when we hit 11,177.67, and from there we've been pulling back. So I do not really see the argument being made about this situation. I just don't see it. I don't see how we are really retracing per se. I mean, really head and shoulders or whatever, however you want to call it. Again, I don't see it. I just don't see that. What I do see is all we've done is to retrace, like I said, off these highs here. That's it. That's all I'm seeing. I don't see anything else. So we're going to have to continue to watch this to see what develops here shortly. Right now it's going to be hard to fathom where we go from here. Again, I do not see where one can make that argument. Again, that's just me looking at it from my perspective. So until someone can show me otherwise, that's where I stand on it. Again, I don't see where we're hitting a head and shoulders pattern. I see it as something quite on the contrary. I see it as us possibly either continuing to test the lows before having this war rally, or we may ignore the lows altogether and just boogie. That's just the way I see it. All we did was retrace off of the low points. That's all we did. You see, first of all, here's the peak. Here's the breakdown. Where are we now in the breakdown? Exactly a 61.8% retracement, which is standard. Between 50 to 61.8% retracements are standard in your Fibonacci. Those of you who follow Fibonacci, there you have it right there. That's what you're looking for. And now we're pulling back. So again, I mean, all this stuff is for the most part subjective. You can't set your clock by it. It's just technical analysis techniques, but you need a bit more advancement than that, because everybody and their mother is using these techniques. These are standard techniques, and they come with pretty much just about any basic software package or charting package. if you're using what everyone else is using, and 95% of all traders lose, what does that tell you? I'm just saying. Anyway, based on the August 20th close here, we are now in a precarious situation where we're consolidated here. We haven't done anything. Truth be told, we need to see something develop here. I'm going to tell you what it is. If you're looking at the monthly charts and trying to determine head and shoulders patterns, here you go. We need to break out above 11,258.01 in order to say that the bull is officially back on a monthly chart, and then we can say 14,000 is in play. Conversely, if we break out below 96.14, then the 2009 low is now in play, and that means we're going to test 64.70. Alright, so that's where you are right now. On a monthly chart, that's what we need to see happen. Alright, so I'll leave it at that. Be encouraged. Remember, take what you can, give nothing back.